Well, the street will closely be watching out for what L&T delivers in this quarter. Do remember, the engineering conglomerate has managed to outperform so far in the quarters gone by, despite the challenges that we've seen on ground. But here's what the street is anticipating when it comes to L&T. So by and large, it's expected to be a fairly muted quarter for the company. And do remember, the results are going to come out only post-market hours, so we will see the reaction play out in Monday's trading session. So around 5:30 this evening is when we're going to get the results for L&T. Now we're expecting a muted set of numbers. So the profit is seen at 3,382 crore rupees. That's up about 6% on year versus 3,197 crores. The top line growth is seen higher by just about 4% this time around on a year-on-year basis to 46,106 crores versus 44,245 crore rupees. The revenue is mainly likely to be driven by the infrastructure business as well as the stronger order book in the hydrocarbon business, which has been doing well. The EBITDA is seen at 5,438 crore rupees versus 5,120 crores. That's up just about 2% on a year-on-year basis. Margins for this quarter for L&T are seen just about flat this time around, and so we're not expecting any fireworks here. 11.7% versus 11.5% that the company has delivered. Do remember, it was a very consistent performance when it came to their overall order book in the previous quarter. So the street is expecting this time around that we will see an order inflow of about 60,500 crore rupees, and this is mainly likely to be driven by the infrastructure business. Let's also talk about the individual segments. The power segment is likely to see very healthy growth and is expected to report a near 64% growth on a year-on-year basis. Heavy engineering is expected to see a growth of about 18% on a year-on-year basis, and the defense segment is expected to see a growth of 20% year-on-year. Now, when we look at the IT and TS segment, where they're expected to post a growth of about 12%, and that's largely on account of the increased spending in their digital platform, and they've launched one educational platform as well during the quarter and will be launching one in Q3 of FY22. The financial business is likely to remain flat this time around, and we're expecting a ramp up in the execution trend. That's what the street will be watching out for. Now, do remember, we watch out for L&T traditionally on their guidance, but for the last 4 quarters, they have not delivered any guidance, largely due to the very uncertain business environment. In light of what we're seeing with the second wave playing out and the uncertainty all around us, the expectation is rife that L&T will continue to refrain from delivering any guidance on their revenues and margins. Just to put it into perspective, it was in Q3 FY20 that they maintained the FY20 order inflow guidance at 10 to 12%, and they maintained the revenue guidance at 12 to 15%. Now we'll be watching out for the outlook across segments, ramp up in execution, and working capital management.